In today's video, August 8th, 2022, we're going to be taking a look at the months of supply of inventory that are here in the Phoenix metro market and which cities are the highest, which city are the lowest. We're going to take a look at what investors are doing. We're going to talk about the top 10 buyer zip codes and the top 10 seller zip codes as well. So those are seller-friendly zip codes and buyer-friendly zip codes. And then we're just going to take a look at some market indicators to try to give you a good idea of what you should do if you're looking to buy or sell in this crazy Phoenix real estate market. If it's your first time to my channel, my name is Ryan Meeks. I talk about all things real estate. I do some neighborhood walkthroughs, some model tours, as well as market updates and some random adventure videos. So if you're looking for some more of that, feel free, whatever platform you're watching me on, to subscribe or follow me. And I am a realtor with my home group, so if you do need help here, I'd love the opportunity to answer any questions you have and possibly help you buy or sell. Coming this week, I just want to let you guys know I'm going to be scoping out Combs Ranch, which is in the eastern side of Santan Valley, and I'm also going to be checking out Bella Vista Farms. So Combs Ranch is a community by Taylor Morrison, and Bella Vista Farms is a community that has some different builders in it, and I'm going to be featuring Meritage Homes. And what's really cool about Bella Vista Farms is that they start in the mid 300s, so you could possibly get into a single family home for just under $400,000 or around $400,000 with some really nice upgrades. And down below here, I have different chapters, so if you guys don't want to hear absolutely everything I'm saying, or if you want to come back and reference this video, maybe show mom or dad, look at the different chapters that we have below. One question I get asked quite a bit, and I figure I'd throw it in this video, is what is the seasonality here in the Phoenix market? So if you look at this graph here, this is basically taken all of the sales and a single unit is one. So in January, we have 106,406 units that were sold in January. This goes back to, I think, 2001. So you can see here in the first quarter, January is a little bit slow, picks up March through June through the second quarter is quite busy. July, August, September kind of tapers off. And what you'll notice too in the July, August, and September months is it's obviously hot as hell. People are leaving some of these luxury communities and these luxury homes. They're not staying here to sell those. So you'll see a lot of volume drop off just because people are kind of leaving this market. They don't want to stay here while it's hot. A lot of people go north, or a lot of people, go back to wherever they are from. October, November, December, it's kind of weird with December. November slows down, but December gets a little bit busier. And I kind of had some different filters on in this graph, but if you took some of these filters off, you'll see December gets a little bit busier for some odd reason. And then January obviously slows. So if you want to know the busiest months, April, May, June. The slowest months are going to be December, January, February, November, December, January, February. Investors in July, so what have they been up to? Now we're seeing Open Door, we're seeing OfferPad with a lot of inventory sitting in their, in their pockets, and they're still purchasing. So between them, iBuyers and institutional investors, they represented almost 15% of purchases and only 2% of the sales. So it's kind of interesting. I get a ton of emails, I get a ton of text messages with people still looking to invest in the Phoenix metro market. And if that's any indication, it's kind of interesting to see these people still coming in, still purchasing. So it'll be really interesting to see what they do over the next few months, if they're still going to be coming in and kind of speculating, because that's really what they're doing. A lot of these people aren't holding on to these for too long. Some of the institutional investors they're actually purchasing these and then renting them out for a few years, holding them in their portfolios. But it'll be interesting to see what the iBuyers will do over the next few months with the amount of inventory that they have once again in their pockets, such as Open Door and OfferPad. So right now we're going to look at the top months of supply, and you can see actually in the orange here, Buckeye, Queen Creek, Litchfield Park, and Maricopa, those lead in the months of supply. Now Paradise Valley has 10.2, yes, but that is actually below their normal figure. It is a very luxurious, high-priced community, Paradise Valley, so they typically have about 12 months of inventory. Gold Canyon, same thing, a little bit more inventory, and Scottsdale, a little more inventory as well. Now, if you go down to Gilbert, you'll see there's 3.3 months of supply there, and the Phoenix metro market, huge market, 3.2 months. and you can kind of go through, see whatever market you're looking to purchase in and how many months of supply are there. What you can see here is we're taking August 2022, comparing it to August 2021, and most of these cities had only 1 month of supply. Some of them had 2 months, but now what we're seeing is 3 to 4 months in most of these, and some still have about 2 months. But this is definitely below where the normal levels should be. We should be at 4 to 5 months supply. So right now we're going to take a look at the top zip codes for buyers using contract ratio, as well as the top zip codes for sellers. First, let's look at the buyers here. So one thing I find real interesting is Ahwatukee. So Ahwatukee is number 9, 14, and 20, covers 3 zip codes. And right now, Ahwatukee has 271 active homes for sale, and it's got 72 that are under contract. So if we take 72 divided by 271, multiply that by 100, we come up with 26.5, which is really, if you look at this little contract ratio ranges chart here, that's actually a cold market. So if you're looking to purchase in Ahwatukee, which is a beautiful area, some very stunning homes, rolling hills, a lot of hiking there at South Mountain, place I definitely wouldn't mind to live. I would go in there, flex your guns, flex your muscles as a buyer, and try to get some concessions, try to get that price down, or try to have them do a buy down with your lender. But a lot of leverage there in Ahwatukee. Scottsdale, what's interesting, number 6 there, and number 16 is that South Scottsdale, which covers the downtown market as well as south of downtown. I just happen to have a new build there as well, which I'm not too excited about this fact, but that is actually a cold market as well. So a great place to purchase. And I think what's going on there is there's a lot of Airbnbs that are being sold off because they think it's the top of the market. So hopefully they sell all their Airbnbs to people that are, actually looking to live there, and I could take my Airbnb and actually have less competition. So that's my plan for that, in case anybody cares or wants to know. Top zip codes for sellers. So south of the Phoenix metro market, what's included with our MLS and included in these statistics, and I get some calls on them as well, Arizona City, Eloy, and Casa Grande, actually. So 3 markets that are actually have good seller markets still. Now Casa Grande had a few zip codes that were good for buyers as well. So, in the what I would take as better part of Casa Grande here, 85122, going to be a little more of a seller's market. And then Coolidge as well, that number's actually gone up. So Coolidge is a very, very hot, it's actually going to be a frenzy market right now in Coolidge. Although that number says 60, it's more like 120. I just redid the calculations. So yeah, plenty of sellers markets down south, and that's because, leading into my next slide here, we're getting into the under $300,000 and $300,000 to $400,000 range in those markets. So a little bit more affordable homes to the south of Metro Phoenix there. And looking at contract ratio by price, we see that the contract ratio under 300,000 is 75.4, and under 300,000, I mean, used to represent a lot more of the market, but now it's only 4.5% of the market here in Phoenix. So going to be very difficult to find a house under 300,000, especially one that looks habitable. Between 300,000 to 400,000, contract ratios at almost 60, so that's pretty close to a hot market. Just hitting the warm market there, the top of it. And if we're looking at the 400,000 to 1.5 million, that's 82% of the market, and it's at 39, very similar between 400,000 to 800,000. And between 400,000 to 800,000 represents 55% of the market, while 400 to 1.5 is 82% of the market. So market indicators, this graph to the right I really like to look at occasionally because it gives our extremes, and it's going to tell us the highs and the lows in things like active listings, and also what's typical, so that we can compare what's currently happening in our market and make a reasonable analysis of where we're at in terms of what a normal market should look like. So just looking at active listings, making this real easy for everybody. Today we're at 21,263, which includes what's under contract, and that's also what's under contract in this chart to the right. Typically 27,230 active listings. So very interesting to see that we're approaching that number of 27,230. and we'll call that average. I mean, that's typical. And, you know, on the high end, 58,000 back in what, I think that was 2007. And 8,000 was the low back in March of 2022. So just something you can look at, compare and contrast. Come back to this chart, take a look at it. It's very interesting to just kind of compare extremes to what's currently going on in our market. And this chart on our left, as you can see, is today's market snapshot. If you guys need these market snapshots, feel free to shoot me an email and I'll send them over to you as well. It's really some good information to look at pretty much on a daily basis if you're into this. Cromford Market Index, this is updated August 4th, but we can see that you know, Fountain Hills, Paradise Valley, Scottsdale, Cave Creek, all still in sellers markets. All of these markets from last month have averaged 33% lower than they were the month prior. So things are still falling here. As you can see, Queen Creek, Buckeye, Maricopa, and I believe even Gilbert now more so has fallen into a buyer's market. So definitely going to see things, that red arrow there, the arrow with the red circle around it, basically means it's good for buyers. If you see that being green, that means that it is good for sellers. So right now things are looking good for buyers, besides the interest rates, which really aren't that bad historically. One thing I like to look at is the Cromford Market Index supply, and the supply index and the demand index here kind of separated. Both of those together create the market index. So supply index is at 65, so not a whole lot of supply. However, demand has fallen below normal. So definitely those two are converging, and when they converge and they cross paths, that's when we'll really start to see prices. If they do, we'll start to see prices go down, just like we did back in, looks like June of 2005 here. However, what you can see with what previously happened is that supply just really kicked in. I mean, they just had a lot of new builds that just all of a sudden came onto the market, a lot of foreclosures, so that supply really ramped up, and then, you know, demand fell. But it was really supply back in mid-2005 that really kicked off the craziness of the housing market crash that happened. So something to keep in mind, a little bit different today. We still have an undersupply, so keep that in mind. So canceled listings, I thought this was kind of interesting. We're getting a lot of canceled, and what I think is happening, or what I know is happening, is sellers are testing out the market. They're not quite getting what they want, and they're saying, forget it, we're just gonna hold it, and they're canceling, because if they go to purchase something and they have to take out another loan, obviously they're gonna have a higher mortgage rate than they did when they purchased that home, if they purchased in the last 4 or 5 years. So what do we see that lies ahead? Well, we're gonna see fewer institutional buyers purchasing with cash, so hopefully that'll bring some normal home buyers back into the equation, settle things down a little bit. A lot of these institutional investors have been purchasing above market value, we've been seeing, so hopefully that will calm things down. And we're gonna see more price reductions, more days on market for listings as well. We're gonna see concessions, things like buy downs, closing costs given to buyers, and then we're also gonna see home warranties being actually given to the buyers, paid for by the seller, as well as more repairs happening by the sellers for the buyers. And a lot of times, instead of repairs, they'll just give concessions. So whatever that's gonna, you know, balance out to be, we'll have to see, but definitely more repairs and concessions given to buyers here in the next few months. A lot more cancellations, like I said, sellers kind of coming in, testing the market, seeing if they can get top dollar, realizing that, you know, they don't want to have their home listed for a month, go in and out, have all these buyers there for open houses, things like that. So you'll see a lot more cancellations. And we're gonna possibly brace for a full-blown buyer's market here. We could already see that in Buckeye, Maricopa, Queen Creek, and Santan Valley. We have some more balanced markets within Tempe, Gilbert, Chandler, Peoria, Mesa, Phoenix, Glendale, and Surprise. But yeah, expect those balanced markets to maybe fall into buyer's markets here over the next few months. So with that, thank you for watching, and we'll see you this week.